Hey traders, Raghee here. Welcome to our pre-market show for Monday, November 9. Should be good to go on audio and video. And thanks as always for joining me. So we've gone live on multiple platforms. So maybe you're catching me on YouTube or Facebook. Regardless, thanks so much for joining me. We've been doing this show now for a couple weeks, and we're going to be going live Monday through Friday. Each morning, 9 to 9:20. So let's get to it, shall we? All right. So for those of you that perhaps this is your first show, what we do is we go through the different economic events that are going to be affecting the trading day, things that I've got on my radar. We're going to be going through the different, it could be earnings, it could be Federal Reserve, etc. We're going to be going through all those events to know what's going to increase volatility. What kind of macro events, what kind of data events, and really what is the directional bias of the market. Let's stay on the right side of the market. Let's not fight the trend. And well, let's get to it. So there we go. Okay, so the first thing I'm going to show you here is a daily time frame on the S&P, the NASDAQ, the Dow, and then we're going to dive into some of the calendar events that are in play. So what you have here is the daily time frame of the S&P. So whether you play SPX, whether you play the SPY, whether you play the S&P futures, we've been kicking off these morning shows to look at the broader markets. Three things to keep in mind: index, sector, stock. Start with the broad, go down to the narrow, and that's exactly what we're going to do here. There are a number of outperforming sectors that's on my radar. We'll go over a few of those, and for those of you that are in my sector secrets mastery or in the simpler options room or the simpler futures room, we're going to be going over a lot of these over the course of this week. I'll be doing an update on my watch list as of today, but there's not really much to talk about. You know, there was a lot of uncertainty around the election, not necessarily which party wins, gang. It's really more about recalibrating. And I think that's probably one of the initial mistakes a lot of traders make. They assume that one party means the market goes up, one party means the market goes down. And we went over this data last week, but I think it bears some repeating here. I think it does bear some repeating in terms of the importance of understanding the history since 1945 of what we presumably have. And it's no longer presumably. We talked about this early last week, and now we can say we have this scenario right here, the column second from the right, which is a split Congress, Democratic president, and this is absolutely fine for the S&P. This is absolutely bullish for the market, only and barely bested by a unified Republican government. It's not about politics, gang. It's about what we presume we're going to see in the markets, what we're going to presume by way of legislation, and just what history has proven to pan out. Don't underestimate how much traders rely on what's happened before. You know, it's kind of interesting to me. If you sign up for when you open up your brokerage account, or when you're looking at analysis, one of the things that we have to say is past history does not necessarily indicate future performance. And yet so much of analysis is exactly that, right? So don't underestimate how much we hang our hats on tendencies as traders and investors. And we're in a very bullish one right now. How can we play this right now? I mean, we have a very strong market. We're going to have a significant gap higher. Those of you that follow me in the futures room, you know that gap psychology is in play. I'm not eager to fade this, but I wouldn't be surprised to see on the open perhaps a 38.2 to 50% retracement fade if we get the setup. Don't short the open, wait for the setup. Let's see if the bearish momentum comes in for a very brief move to the downside. In the meanwhile, gang, the move higher is not a surprise. In fact, not only in the free videos, but our conversations here in the previous shows, we've talked about the fact that when you look at an anchored volume weighted average price, which I'm going to go into a little bit in detail with y'all right now. So this is what's known as an anchored VWAP, or an anchored volume weighted average price. And there's two of them. There's one that I anchor called a rolling 10-day. So today's the 9th. This is the way we do it. So we're going to count back 10 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It lands me on the 30th of October. I update that, apply it, good to go. So I've re-anchored a 10-day rolling moving average. The other anchored volume weighted average price, almost like a volume weighted moving average kind of idea, if you're trying to conceptualize what it is the 1st of November. And I'll leave that there until about 4 or 5 days into December. So we have been consistently above the 10-day rolling moving average and the 1 month anchored since election day, since last Tuesday. Once we break that level, once price is clearly above those two VWAPs, volume weighted average price levels, we have what's known as bullish directional bias. In other words, it's just a really fancy way of saying don't short the market. Don't get too aggressive on the short side. If you do look to fade the market, do so very prudently, do so very much in a short-term time frame. Now, the other thing that I want to show you here is the NAS and the Dow. All of these are exhibiting the same characteristics, gang. Don't try to fade this market. Now you'll notice the NASDAQ's acting a little bit different. The gap on the NAS, the S&P versus the NASDAQ, the gap here is very different. What's going on? So if you've been joining me either in the futures room, the options room, or here in the show, what is going on? Why do we have such a distinct difference between the Dow? Look at that gap up in the Dow, the S&P, and the NASDAQ here. So again, that's one of the things that I have written on my, and I'm a big fan of writing. I'm a big fan of, putting notes to paper. Another alternative is something called Workflowy. I like using the workflowy.com website. It's free. It's amazing. If you like making lists, if you like making outlines, this thing is nirvana. I use that darn near daily. But one of the things we can see already is the fact that we've got this separation between the behavior in the NASDAQ and behavior in the S&P and the Dow. Now, I think some of you are probably already thinking, well, Rag, I've got a pretty good idea of what that might be. But let's kind of go through the process, right? So we'll start off with Forex Factory. What's the calendar say for today? Well, we don't have a lot. We've got the ECB President Lagarde, which is going to affect our EWU, EWQ, EWG, those ETF countries that I like to play. So there's countries that have ETFs that we can play through the stock market in the US. One of my favorite ways to do that is options on those ETFs. We've got the Bank of England, that's the EWU, the UK ETF. And then we get into the US and it's nothing. We've got a little bit of Fed speak at 1:30 p.m. with FOMC member Meester, who typically is pretty hawkish, but all the Fed members have been really clearly lining up and remaining very accommodative in light of the environment that we have right now. So there's not really a lot to deduce from whatever the Fed members are saying. They're going to say they're headwinds. They're going to say they're doing a really good job, pat themselves in the back, and then we move on knowing that we're not going to see a hike in interest rates anytime soon, that the Federal Reserve says we need that stimulus package. We know it's coming. 2 trillion, 2.3 trillion. I've heard a lot of different numbers. It's coming. So the market's going to be happy about that. And the Federal Reserve needs treasuries to start buying back so they can increase their balance sheet. Full steam ahead, gang. Do not fade this market. I know there's going to be a lot of macro conversations out there about the chaos and whatever other fear mongering was happening before the election. Volatility is very different than a downtrend. And we know we were dealing with volatility. We were dealing with temporary directional bias that was a little bit bearish, but that is not a downtrend. So no reason to go in here and try to pick tops and short some massive turnaround. I got a lot of emails over the weekend about, is the downtrend coming now? And a resounding, there's no other way to say it, heck no. All right. So let's go back to the initial question. So then why is the market behaving the way it is? Let's go into our estimized calendar. So could it be something like earnings? Likely not. I mean, we do have some interesting earnings this week. McDonald's, AMAT, Cisco, Disney, going into Home Depot, Walmart, Lowe's. These are all important stocks. Why do I single these stocks out? I single these stocks out because these stocks are heavily weighted within the indices, within the sectors. Again, remember, index, sector, stock. So these are weighted both heavily within the indices and the sectors. They're not just the stock du jour, whatever the hot stock is of the month. They're stocks that are important because their movement influences ETFs, and ETFs influence their movement. So these are heavily weighted stocks in what's really dominantly a high concentration weighted passive investing world that we are all living in. And it is going to alter the way in which we build watch lists and the strategies that we look at for trend following trades. Okay, so with that being said, nothing on the earnings front. All right, so a lot of you are going to say, okay, Rag, we know where you're going. And some of you may not, so let's do it right now. What do we know that's happening right now? There is some vaccine news out right now. And what's going to impact what ETF is going to be impacted by vaccine news? The XLV. What sector has importance to us? The healthcare sector, the XLV ETF, and the stocks within it. So let's do this. Let's jump on over to what I call the multi-charts and dive in there. And what we have is a high tide. Right now, this high tide has been dominated by my being long things like Danaher and Thermo Fisher. Those are our relative outperformers within the healthcare, but we know healthcare is very sensitive to these rumors, as are the broader markets. But why is the NASDAQ not participating? It's not participating because when you think about the weighting of the Dow and you think about the weighting of the S&P, they both include XLV or stocks that are heavily weighted within healthcare. So you're going to see the Dow and the S&P benefit from this and not really the NAS. It's not that the NAS isn't going to head higher. Again, this election has brought the tendency we've seen since 1945 to see higher highs, better annualized returns in the S&P. So no doubt we're going to see strength in the equity markets. But the idea now becomes, well, what sectors are going to outperform today? What sectors are going to outperform going forward? So right now, it's just a matter of flow. And right now, I think we're going to see maybe folks back off some of the tech narrative and just benefit from the narrative we're seeing right now. So when we have a healthcare narrative, it's going to benefit the S&P and it's going to benefit the Dow in a way that the NAS cannot participate in. So vaccine narratives are going to do this. Now that we've got the election behind us, we can focus on the other three. So we had four narratives going into the election itself and the results of that, COVID numbers, vaccine optimism, and stimulus. Put a checkbox in stimulus. It's going to happen. Vaccine optimism, we're going to see that play out this morning. COVID numbers, when the vaccine narrative takes the forefront, the COVID number concern usually falls to the backdrop. And of course, the election issues are behind us. So now we're focusing on one to two or three of the current narratives we'll take foreseeably into the end of November. And certainly the vaccine and the COVID numbers will take into 2021. But I presume that by Thanksgiving, we'll get some idea on stimulus. That narrative is going to come back around. All right. So by the way, great to see so many folks here in the rooms. Good to see you all. Good morning. Good morning. Will we get a VWAP snapback? I would love to see a reversion to the mean of my V score. I would love to see a pullback because when we see such strength as I would presume we're going to see a reorganization of the uptrend. I would love to see any kind of pullback. May not be to the VWAP, but I'd love to see, to the spirit of that, I'd love to see a pullback. Huge down move in gold, but dollar's relatively unchanged. As far as what I would do with gold. Now, I've been bullish on gold, and I still am. So let's take a look at gold here. So big move lower on gold. So this is a real yield. So I think a lot of times people look at gold and they think it's a fear barometer. And let me tell you for sure, it's not. Are we down in gold because we're up so much in the markets? Really, we're not. Because if you think about the overall movement higher in the markets, gold should already be in a downtrend. So if you have a negative correlation, you have to have a negative correlation. I don't mean to be redundant. What I mean to say is you can't take correlations candle by candle. Now, I love the move in gold. I'll probably get long again, but please keep in mind, while the scope of the move in gold is clearly a dramatic one. I mean, that's a significant, when you take a look at historical probability and you take a look at price movement ranges dating back 6 months, this is a significant move in gold. It's a giant move in gold. It's probably, let's see. Yeah, wow. Well, I'll show you right now. What is our typical move in gold usually, right? I think we're 2.5 times the probability, the daily price movement range. Take a look. Yeah, about 42. So we're 2 plus 2 DPR times 2 daily price movement range. When you put a measuring stick of about 40 to 42 points up against gold and you see a range today of almost 100 points and the day has hardly begun, this is a significant move. I would wait, for those of you thinking, do we buy gold today? Let's wait for an inside day or a minor low. And I'm going to buy gold again. Absolutely. We ran gold up from about 1880 to 1950, and we had targets on the way at about 1930 and 1950 because, like I said, even though the scope is certainly startling, where we exhausted at is not. We've exhausted from this level many times. We exhausted with a minor high or a doji candle right up against a value area low. So you have a price-based candle just heads up right there, right up against a volume level. And where we've exhausted numerous times, that area around 1950 to 1980, that's a very slippery part of this slope. So the move is surprising, but the fact that we saw resistance there cannot be. Okay, but I'll look for an inside day or a minor low, and I'm going to saddle right back up. This will be the third time that I'm going to buy something down in this area. So I'm game. But as far as the dollar goes, let's take a look at the euro, which is your, unless you subscribe to the Intercontinental Exchange, the ICE, you're going to have to go through, say, the 6E to understand what the dollar is doing. And so 6E, remember, dollar weakness or dollar strength can be, anytime you start talking about currencies, remember, there's no pure play in a single currency. I know that blows a lot of minds, but there's no pure play. In other words, you never just play the dollar. Even if the title of the symbol says US dollar index, remember, that's a basket of currencies versus the dollar. If you're playing the 6E, it's the euro versus the US dollar. If you're playing the 6A, it's the Aussie versus the US dollar. So you're always playing the US dollar against somebody else, all right? Now, the idea here is that even if the dollar strengthens a little bit, weakens a little bit, or remains perfectly flat, we do have currencies that continue to gain against the dollar. And we've been long New Zealand dollar and euro, two of your better contrasts. Yen was one I said, be careful, because if the US stock market takes off, yen will weaken. Canadian dollar was one we said, hey, if the stock markets take off, which of the COMDOLs, commodity currencies, are relative outperformers? New Zealand dollar by a country mile, and the Canadian dollar. So this is where my futures traders out there, you can play the 6N, the 6C, even the 6E. And if you're an ETF player, there's no ETF for the New Zealand dollar, but there is the FXC for the Canadian dollar and the FXE for the euro. Be cautious of FXY or the yen relationship, because the yen is likely to start weakening with the kind of strength we're seeing in equity markets. So pound is another really good one. Justin, yes, pound is another. So 6B or the pound versus US, that's another really good one there. Okay, so let me wrap up here. I got a couple more questions. Cannabis, right? So Phil, what I did going into the election was you can categorize the different sectors, niche sectors, even like cannabis, which are excellent places to be if we saw a Biden victory. So you had two columns, what a Trump victory meant, what a Biden victory meant. What I did going into the election was I stayed long gold, short dollar, and long infrastructure, which is really a combination of different stocks within the XLI, the ITY, and the XLU. So I kind of combined industrials, transports, and utilities. And you'll get a hodgepodge of some of the relative outperformers that would represent infrastructure, because there's no real great infrastructure ETF. So that's what I did. I said, what's going to be completely agnostic, right? What sectors and symbols just don't care who wins? Or another way of looking at it is what sectors or symbols benefit from either victor. So that's where I went in saying, look, are there places I can make a bigger bet, pick a side? What I did is I tried to be neutral. But really good point. Cannabis is going to be en fuego. Yeah, very good point. Very good point. So again, check out your estimized calendar each morning. Check out your Forex Factory calendar this morning. Today's narrative has nothing to do with the calendar, though, even though those are good habits to have. Today has everything to do with the news. We are now looking at an era of split Congress, Democratic president, which is very good for the stock market. We're going to now get to talk about stimulus again, and then you add to that the gravy in the headlines. And I'm taking a look at my tweet deck with all my different news flows, and certainly vaccine optimism is absolutely dominating the morning conversation. All right, so I'm going to go put my CNBC on mute so I can see how this plays out. I'm going to head on over to the Simpler Futures room today. By the way, if you're a Simpler member, I'll see you in the options room at 12:30 and also the futures room at 12:30 today. Okay. And if you're not already a member of Simpler Futures or Simpler Options or any one of our masteries, head on over to simplertrading.com and check it out. All right. I'll see y'all tomorrow morning. Take care. Be good to each other.